Hi everyone, sorry for the delay. Tracy Luciani Price Team Mortgages, and this evening I thought I would talk about amortizations. So when you are purchasing a home, you are limited to maximum 25-year amortization. So you can look at a calculator and that will give you an indication of what your payments will be when you're trying to purchase a home, but your maximum amortization is 25 years. Now, if you refinance your property, you could go up to a maximum of 30 years. And a lot of people don't know that. That can dramatically improve your cash flow. What the banks typically try to do is crank down your amortization. And we see this as a big problem. Most people actually should have a 25 or 30-year amortization, unless you're in the final stages where you have a $50,000 or $100,000 left to pay, then that's a different story. But people that are, living paycheck to paycheck and don't have a lot of cash flow, they should be definitely in a 30 or 25-year amortization with preferably no debt. That way you can take advantage of your prepayment privileges, and people forget about this. Often I have clients that come in and say, I want to pay this mortgage off over 15 years. I'm 40 years old and I want to be done the mortgage by the time I'm 55 or 60 years old, and I don't want to have a mortgage after retirement. It's a good plan. But other things get in the way, like divorce, separation, all kinds of like illness and everything else. So my feeling is really think about your amortization. I often coach people and I say, I know you want a 20-year amortization, but perhaps you should look at taking a 25-year amortization, see how it goes, and then you can prepay your mortgage. Many of our lenders have the ability to pay 20% per year. Now, on a $300,000 mortgage, that is $60,000 a year. So if you could pay $60,000 a year, you can get rid of your mortgage in 5 years. So you never know what's going to happen. Take the 25 years and prepay your mortgage based on your cash flow. And what happens if you take a lower amortization, many cases, often because people feel that they need to pay the mortgage off in a certain length of time, they end up actually shooting themselves in the foot. And here's why. Because you have cranked your amortization, many of these people will say, I want a 10 or a 15. When you do their cash flow, they end up having to borrow money on their line of credit or their credit card, or they have to get another loan, or they need a new car, so now they have a car payment. So all of a sudden there is no room to actually take on another payment. So cash flow becomes very tight. So when you're doing your mortgage, when you sit down with your mortgage broker, talk about your goal to pay it off, but then take advantage of your prepayment privileges. And not many people do this. Very few people, and they don't take advantage of something that is so beneficial to clients. I still have a mortgage. I have a 25-year mortgage. What happens if I get sick next year? I don't want to be forced into a payment of $2,000 a month on my mortgage. I like a nice low mortgage, $1,200. But then I double up my payments. I increase my payments when I can. The other reason you want to be careful about the amortization, especially if you have grown children that may need your help in the future, is you don't want to crank down your amortization so your payments are so high that you lack the ability to help your children also get a home. We often see that. So you keep room in your cash flow so you can help others or help your parents or help your children. Or perhaps down the road, you may want to buy a rental property. Well, if you have cranked your amortization up so high, your payments so high, you have no ability to buy a rental property, for example. So we're forced into refinancing people in order to buy a rental property. So again, I will let you know about your prepayment privileges. That's the best way to control your life. When it comes right down to it, cash flow is everything. We feel good when we're cash flowing and the money's coming in and we're not relying on our paycheck to come in order to pay our bills. When you have freedom, when you are free and your checks come in and you have the ability to say, hey, I have an extra $500, I can put that on my mortgage, but my payments are low, but this month I have extra cash flow. Or maybe you're getting a big refund from the government. Maybe you get $2,000 or $3,000, but keep your payments where there's lots of affordability, where you're not stretched, where you're not stressed out about money. Because this culture that we have of being stressed out about money often makes us very, very, very stressed out and so anyway, I'm talking from my cell phone tonight, so it's a little bit different. I tried to get on by my computer. And so I want to just make sure that everyone understands about amortizations. And if you have any questions, we're always here to help. Even if it is for some friendly advice, that's what we're here for. So we'll talk to you later and have a great week. Bye for now.